Good day, YouTube. This is J Money with Falling Forward Financial. Just another dividend stock here. I talk a lot about probably mostly dividends, MJ, EVs, quite a few different things here on the channel, but that's probably the three most popular. MJ is popular, dividends are popular, and so are EVs. So those are my probably three biggest holdings. So just did a video on AT&T and Verizon and some other dividend stocks. I'll link those in the description as well. But this is two dividend stocks you can buy and hold forever. Did you know that dividends made up roughly 40% of the stock market's total return since 1930? So very interesting. Investors can buy dividend stocks for passive income, but don't underestimate their power to create wealth over the long term. You don't need to take considerable risk to find the next big thing. Instead, consider these top two dividend stocks. These come about as close to a buy and forget as you can get. Quenching the world's thirst. So, like I said, I'm here in Omaha, Nebraska, along with Warren Buffett. As you follow him, or if you do, you should know he's in Coke. That's Coca-Cola, not just Coke. Ticker KO is a long-time favorite of Warren Buffett for a good reason. The stock's been raising its dividend for 60 years. Last I heard, he's never sold a share of Coke, and I think last I heard, something like $100 million a year makes just off of that particular dividend. So it's a dividend king, is one of the world's largest beverage companies and sells more than $41 billion yearly in soda, water, juices, teas, and coffee. Dividend yield is 2.9%, generating solid income for investors. So here in the purple we have Coke revenue. So right there, the orange is the free cash flow, and the blue is the dividend. So you can just kind of see it's just slowly increasing there step by step. From 1990 to 2020. Coca-Cola's consistent growth and efficient business model are crucial to its success as a dividend stock. First beverages are a massive and fragmented product category worth an estimated global value of $1.8 trillion. And so that's not going away. People are going to continue buying these irregardless of what the economy does and all that good stuff. So pretty much a safe play, I would say. Again, I don't give tax, legal, or trading advice, just state my opinion. And if you can compete with the company's enormous distribution, Coca-Cola-owned products get top-notch shelf space in stores and other points of sale, elbowing out the competition and staying in front of the thirsty consumers. Secondly, the company has become very efficient at converting revenue into cash profits. Coca-Cola doesn't bottle its beverages. It sells concentrated syrups to bottlers and customers. About 29 cents of every revenue dollar ends up as free cash flow. So that's a pretty good amount, I would say. Dividends are a cash expense, so having steady cash streams is key to a consistent dividend. Dividend itself is also very safe. Coca-Cola's dividend payout is a manageable 72%. But with $11.6 billion in cash on a balance sheet, Coca-Cola could pay its dividend for more than a year if the business shut down overnight. So that's huge. So just what I said, pretty safe dividend here. So management has called for a revenue growth averaging about 4 and 6% annually for the long term. So investors looking for a steady compounder could do well with the proven winner. So next is America's largest retailer. Consumer spending drives U.S. economy, accounting for nearly 70% of the U.S. gross domestic product. And Walmart, WMT, plays a big part of the largest retailer in America. Dividend aristocrat that will soon become a king. Walmart has raised its dividend for 49 years and counting, and gets a 1.7 dividend yield at the current share price. So we're in the purple is the revenue, orange is the free cash flow, and the dividend here in blue. So just kind of stair-stepping up. It looks like it keeps going up. So Walmart's business is built entirely differently than Coca-Cola. It relies on massive volumes at low profit margins. Walmart does more than $587 billion in annual sales revenue, the most of the public traded company. According to Walmart, 90% of Americans live within 10 miles of a Walmart store. Company sold $219 billion in groceries in its 2022 fiscal year, ending January 31st, 2022, pacing far ahead of Kroger, the largest supermarket chain in the United States. Walmart's massive size also gives it enormous bargaining power with suppliers. Sell a product at Walmart, it is probably your largest customer by a country mile. The Walmart's bargaining power helps it secure products at lower prices so that it can sell at lower prices than its competitors. Amazon has emerged the dominant e-commerce company in America, but Walmart's massive store footprint has helped it remain relevant and continue growing. Like I said in my past Walmart videos, they just need to work on the e-commerce part of it a little bit more to catch up with Amazon, if that's possible. But they have the storefront, so they have the brick and mortar to do it, so we'll just have to see if that ever gets done or if they're just going to be competitors. So competition is good, though. Investors shouldn't expect eye-popping growth over the long term. Walmart has averaged 2.5% annual revenue growth over the past decade, but given the company's massive footprint and the slow and steady nature of the inflation and population growth, given the company's massive footprint and slow and steady nature of inflation and population growth, the company could eke out growth and dividend increases for years to come. So, but anyway, just wanted to do a quick video on those two. So again, we have Walmart and Coke, and you could shop at Walmart and buy your Coke there and be the best of both worlds and basically be putting money back into your pocket if you own both of those stocks. But that is it. If there's any other dividend stocks out there you want me to take a look at, I'd be happy to do that as well. And if there's any other stocks out there, just of anything, you can put that in the comments. I'd be happy to take a look and see what I can do to make a video. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.